All right, good day, traders. Happy Wednesday. There we go. Got it right. Happy Wednesday to you. Welcome back to the Tier 1 Trading New York live trading. You guys caught me. I was right in the middle of potentially answering a question, and I stopped because we had to start the live room. I was going through Twitter real quick to respond to anyone that shot me a message, and I got the question, what's your advice on passing a prop firm? So passing a prop firm challenge. What's your advice for passing a prop firm challenge? So before I answer, right, I want to ask you guys, what advice would you have for a trader? If a trader came up and asked you, hey, I'm trying to get funded. I'm trying to do one of these online prop firm deals. Can you loan me or lend me any advice that you think would be helpful in passing the challenge? What would you say? What would you tell that trader? Fortunately, we have a few people here that have passed prop firm challenges. So we've kind of been through that before and the ups and downs. Let me undo things so you guys can actually see who's typing. Sorry about that. Therefore, to take the privacy off. No privacy in here. But there's two bits of advice that I would give. One, and this is a hard one, but it's necessary. Still, even though the whole point of the challenge is about making a certain return, do not worry about the money. Do not worry about the money. When you focus solely on the money, you start to do some very strange things. This was the biggest problem I had when I was managing money. Now, again, my situation was a little bit different because I had a very active client who liked to call and text and email multiple times throughout the day, asking how everything was going, lending his advice on what he thinks I should be doing, kind of really micromanaging the whole situation. My biggest client did this. The rest of them are fine. This is my biggest one. So that kind of made you worry even more about the money because every time you took a loss, you'd get an email from him, a negative email from him saying, how can you lose? Blah, 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 blah. You're supposed to win all the time. And then every time you took a win, oh, how come we only won that much, right? It was a lose-lose situation. So that really wrecked me mentally. But don't focus on the money. Whenever you focus on the money, bad things are going to happen. This is why we always talk about process over outcome, process over outcome. Don't focus on the money. Focus on the consistent, deliberate actions that will result in you making money. When you focus on the money, you're going to start revenge trading. You're going to have FOMO, fear of missing out. You're going to start entering things too early. You're going to start taking targets early. You're going to start pushing stops back. Your whole trading is going to be dictated by that currency symbol of yours, and you're going to lose. So that's one thing. Again, easier said than done because the whole point of the challenge is you need to reach a certain profit by a certain time. So you are paying attention to the money. But that's trading in general regardless, right? Even if you're not doing a prop firm challenge, right? Our job as traders is to make money. The second one is that you may have to adjust your strategy, right? Depending on your system or strategy and how you trade, it may not be built to win a challenge. And almost every trader that I've talked to here on the platform who has gotten funded said they had to make some sort of adjustment. They couldn't just trade the way they normally trade it. They had to make an adjustment, whether it was the time duration in which they trade it, whether it was going from a 4-hour chart down to an hourly or an hourly down to a 15, whether it was becoming more aggressive with entries, whether it was becoming more aggressive with exits. And aggressive can sometimes mean, hey, you're taking targets earlier than you usually would. Now you're adjusting your rules, so you're still doing it on a consistent basis, but you're taking targets earlier than what you would do in your quote unquote normal trading. For some people, it meant they're taking targets later, where instead of taking a target 1 and a target 2, they're taking all off at target 2, but rolling stops to break even once target 1 is hit because they need to do that. For other traders, it meant how they manage their positions, right? There are lots of drawdown rules with most of these prop firms. So maybe you have to tighten up your stop. Maybe you have to get a little more aggressive or more active with your active trade management. So be willing to adjust your strategy. I would say even this, expect to adjust your strategy. And this is where kind of the value of what we're doing here pays off, because we always talk about the difference between the skill of knowing how to trade versus the ability to just trade a specific system, right? If you only know one thing, if all you know is a system, you don't actually know how to trade, but you know, like, when this moving average crosses this and that does that, then I buy and sell. You're kind of stuck. You're limited. It doesn't mean that you won't have a successful trading career in your own right. You can certainly do that, but you are limited because you don't really know a skill. You just know a system. So you can't really make adjustments. You don't have the ability to adjust to the situation. And again, that situation can be different market conditions, which I've learned over my 16-year experience, that you do have to make adjustments as the market conditions change. And we're coming up on some very interesting market conditions, I think, in the next 2 or 3 years. But you may have to adjust your trading based on the requirements as well. And all the traders that I've spoken to have kind of gone back to the drawing board. They've kept the base of their system and how they trade, meaning the core principles, but they've had to make slight tweaks. They've had to change this a little bit. They've had to adjust this a little bit in order to make it fit what the challenge demands. Because most of these challenges, I don't want to say demand an unrealistic expectation, but you got to hit a hot streak. Let's put it that way. It's the demands are typically a little bit higher than what you would usually expect on a consistent basis from your strategy or your system. Orsi says, make sure you know your system, including your drawdowns. Yep, very important. John said, did those traders go back to their original trading system after they got funded and didn't have the time restraint? I don't know. I can say one didn't, but it depends on the requirements for the prop firm. In most cases, at least the ones that I've worked with, it's kind of the challenges are the hardest bit. Meaning the challenges are the most kind of strenuous requirements, and then once you kind of meet the challenges, then it eases up. You no longer, you still have requirements that have to be hit, but they're not as strenuous. Cody just chimed in. He says, yes, he said 10% a month is not a usual return we all make. So I know one for sure that has actually stayed. He kind of fell in love with the adjustments that he made, and he's like, I'm just going to trade like this from now on. I'm not sure if he stayed with the same time duration, but he stayed with the same methods. Cody's saying he kind of shifted back to what he was doing before. And I'm sure you keep bits and pieces of those adjustments, especially if they were beneficial to you. But yeah, I would say that's going to be on a person by person basis, John. It depends on kind of what adjustments you make and whether you feel they are profitable or not. Because here's the thing, right? It's funny sometimes when we're forced to do things, and again we're allowed to get creative. We think of ways to make the situation work that we might have never thought about before. So, and this is cool in every aspect of life. I was thinking about this the other day. I was dealing with, I was having flashbacks to kind of a lot of things, but to this point where I had a bunch of debt. And it's one of those things where you have a bunch of debt. For you guys that don't know the story, I quit 3 jobs to focus on trading and all this fun stuff. So like I had a nest egg, and it took me a lot longer to learn how to trade than I initially thought. So I started running out of my nest egg. I started piling up debt. And I remember sitting back and just trying to figure out how to get myself out of that situation. And when your back's against the wall, you tend to become your most creative self, and you think of ideas. And you think about the same thing with these prop firm challenges where, when you need to do this or you have to do this and you got to make adjustments, you typically become creative. And in that process of creativity, you're thinking about things that you probably didn't think about before. And some of those things could be great ideas, and you wind up being like, hey, you know what? I never thought about this before. This is actually more beneficial to my trading than how I was trading before. I'm going to stick with it. So you tend to see that happen a lot as well. Um, John says, makes sense, almost like a live version of testing. And if it works, you like it, and then you don't fix what's broken. Yeah, like assuming you're, and we're talking about just normal changes to your strategy. We're not talking about like life changes, like you're not, you know, quitting your job so you can day trade in the middle of the day. That would be a different thing, because you may have to go back to your normal thing after that. But yeah, we're talking about simply just changes to like the strategy. Yeah. Um, but it also depends on what you're doing, because again, some people are really risk adverse. So if they have to put themselves in a more aggressive position to meet a prop firm challenge, they may do that specifically for the prop firm. But in their own personal trading, they may still be risk averse because they're not willing to kind of risk their own money at the same rate. Cody says, we are constantly adapting to the market. We have to adjust to market conditions when the market presents itself. Yeah, that is probably the biggest lesson you'll learn in trading, the biggest lesson that no new trader will know, unless you're listening to this right now. I think every newer trader, and you have no reason not to notice, every newer trader will assume that once they find something that works, it will work like that forever. Because there's no reason not to think like that. And the truth is it is a very fluid situation. It is very similar to coaching, right? You look at any sport, the game has changed, whether it's baseball and analytics and either go for the home run or strike out, whether it is, you see the different formations in soccer get popular, five at the back, wing backs, no wing backs, right? You see it in football as well. The West Coast offense, the run and shoot used to be everyone ran the ball for a little bit. Now it's pass heavy, right? The thing is, trends happen in whatever you're doing, and then trends change over time. And you look at the difference between coaches that have long-term success. Coaches that have long-term success are the ones that are able to really adapt to the new style of play in whatever sport's going on. Coaches that end up getting fired are the ones that maybe their style of play or their system fit the style of play at the time, but that since has been outdated, right? There's a new style of play and they're stuck in their ways. They can't adjust, they can't adapt, and they can't really catch up. They get left behind. And trading is the exact same way. And the thing is, you don't know it until you know it. That's the part. You don't know it until it happens, and you're like, man, like this is the most important skill. And that's why, again, we preach so much on learning the skill of trading versus just learning a set strategy, because, well, it's foolish to think that strategy will the results of that strategy will be exactly the same for all time. It is going to change. We got to get to the trade of the day eventually. I was going to look at gold today real quick. Zach says, Akil, good morning. I have a question about diversions for you. Sure. Let's hold that until we're done the trade of the day, because I got the live streamers here and they're probably bored to death because we haven't looked at any charts. So let's look at the trade of the day. It's going to be a short one anyway, and then we'll get back to your question, Zach, about RSI divergence and its significance. But we're going to gold. I gave it away. We're going to go to the shiny stuff today. We're going to take a look at some gold. Give me a second to swig the water, and we'll get right into it. There we go. Ooh, that was bad. There we go. We're going to take a look at gold today. Not too much in the market again. But gold has an interesting possibility because, and it's really lagging behind silver, we can see here on the daily that we've just put in a nice little retracement, and we are working down towards a previous structure low right here. Now, if we go down to our 4-hour chart, you're going to see that price action has just violated, not technically violated yet, but we're working on violating our previous new structure low, right? So just like we spoke about yesterday with a handful of opportunities, we have violated this level. Where do we expect price action to go to next, right? What acts like a magnet? This is a very easy oversimplified, because it's not complicated. It doesn't have a bunch of bells and whistles, but it's trading, and I like my trading boring and profitable. Yeah, previous structure, right? Price moves from structure level to structure level. Structure acts like a magnet, right? Once a level of structure is violated, right, it pushes away from it. It finds the next level of structure, which has this magical gravitational magnetic force that pulls it to it. And that's why I tell people, if you can get good at identifying key levels of structure, half the battle is done. At least you can make good predictions. At least you can make good predictions. Now you got to figure out entry stops and all the other fun stuff. At least you can make good predictions in the market. And that is more than half of the battle. Well, not counting trading psychology, which is all of the battle. So we have this expectation now. Again, we haven't broken and closed below this technically here in the 4 hour, but we have this expectation that if we're likely to go lower, then we're likely to go lower to this level. So what this is going to do is this is going to present us with two different opportunities, right? A buying opportunity, a selling opportunity, or both. So if you are a buyer, your job is simple. Wait until price gets down to our previous level of structure, and then look for what you need to enter for your counter trend play. So if price action reaches lower level of structure, then, and you fill in the blank, then look for RSI to go oversold. If RSI is oversold, then look for higher high, higher close, or double bottom, or whatever you need to enter the trade. But you're looking for a counter trend trade. You're looking for previous proof that this previous level of structure support will hold, and you're looking for a little counter trend reversal, right? If you guys attended yesterday's session, we talked about kind of the inner workings of the buyers and the sellers, the bulls and the bears, and looking at opportunities where buying pressure has slowed up and selling pressure has, increased, or vice versa, right? So that's one option. Another option you have is to look for a trend continuation in advance of that level, right? So we've made the prediction that price is likely to continue lower. We're likely to test these lows. Is there a way that you can get involved in a move to this destination? So those are the two trades that are on the table, right? You look at this on the hourly chart. We do have the lower low, lower close, right? If you're a breakout trader, maybe you take the breakout short right now. Again, a very aggressive approach, but it is an approach. Another approach, maybe we get a pullback, right? Price is putting this nice little level of structure right here. As we held previous level of structure support before violating it, look for a pullback, and then look to catch that next extension down. And then, of course, if you want to be someone that does both, you can look for the retracement. You can look to catch the extension down. Once the extension gets down, you can exit your selling position, make some money, and directly enter a buying position and maybe make some money on the way up. So a few options here on gold. And I'll tell you what, if you take a look at silver, silver's already shown us kind of the story. Silver's already kind of shown us the story. Violating structure, right back down to the next level of structure, retracement back into structure. So decent opportunity here on the shiny stuff. Any question about gold before we get into Zach's question? We can see if we go down to the 15th for more of a day trading time frame. We're starting to retrace a little bit. We can open up this zone, right? Our kill zone, technically right here to right here. See if we can bring in some Fibonacci's. Pinpoint an area in here, Fibonacci extension, or excuse me, retracement, swing high to swing low. 3D2 right in the bulk here, 50% a little bit higher. Bring in one from our most recent swing high to swing low. 50% 3D2 618. So a nice cluster. Again, this is the area that I think is going to be more important right here, but nice cluster between a 3D2 of 50% and a 618 right here. So a nice little zone to pay attention to on the pullback. Let me know if you guys have any questions. I'm going to get this into our chat real quick. YouTubers, trading viewers, if you want to hit that like button, I'm supposed to remind you of that. Feel free to do it. If you have any questions, get it in right now. If not, we're going to boot you out and we'll See you tomorrow. But nice little trend continuation opportunity and or counter trend trading opportunity here on gold. And then Zach, we'll get back to your euro yen question. This is XAU USD 1 hour potential bearish TCT and or bullish structured trade. What did I spell wrong? Structure. I can't spell. That's why I trade, guys. That's why I trade. All right. Onto the main dash. Just give me a second to get it into the pro trade log. And then we'll see if any questions came in. And if not, we will get to rolling. Bang. Got a question on Tradingview. What about euro dollar? I'm sorry for the live stream here. We only look at one trading opportunity. I can tell euro dollar's got a few advanced patterns setting up on it. The closest of which being a potential bullish cipher, which does give me this. I'm going to do one more bonus because I do want to talk about this because we had a question on the chat and I want to remind you something. So you're lucky. Usually we do just one trading opportunity here. This is a live trading room that I run for our tier 1 trading members. So I don't want to make it unfair and do a live stream. We kind of give you one to kind of see what's happening. And if you ever want to join us for the full session, the London and the New York session, feel free to do so. Just head over to the site and sign up for a trial membership and you can get on. But I do want to look at euro dollar real quick because this was a question that I saw when I was sleeping about the pattern tool. And if you're going to be analyzing patterns on Tradingview, understand that if you're looking for cipher patterns and you're going to use the pattern tool over here, you need to use the specific cipher pattern tool, right? If you just use the XABCD pattern tool, it is going to give you a false fib. Here's what I mean. A false fib on the extension. So we got our cipher looking like this. X to A, potential cipher. A to B, pay attention to the digits here. B to C, right? What does that fib say? 162, right? Pay attention to that. And then your decompletion for the cipher down here, right? A little bit off, but right there. Now, let's take our Fibonacci extension tool and measure it how we would normally do it if we drew it manually. Swing low to swing high and back down. Are we anywhere near a 162? You guys see the difference here? Very important. If you're using that X to A or ABCD, whatever it's called, tool here on Tradingview, you're going to get a false fib here. And why that's important, and this is years ago, I actually had them, fortunately, I have a good connection with Tradingview. I was on the beta testing team when Tradingview first came out. It was funny because we were actually creating our own charting package. This is back when we were still trade empowered. We were creating our own charting package, and the idea was to get the whole platform on the same charting package so we can watch everything you do and set up this bigger play to kind of start our own prop firm and whatnot. And then Tradingview came out and we saw their beta version. We're like, man, ours is crap. We scrapped the idea. But I have a good relationship with Tradingview. We have a few tier 1 members that are actually moderators and workers full-time for Tradingview, which is kind of cool. And I remember when the cipher first came out, everyone's trading it. And of course, no one really takes the time to learn the rules because you just go to the internet and learn whatever the internet tells you. And I kept seeing bad cipher after bad cipher where I kept telling people like, hey, I usually don't comment on people's like trades because I don't really care and it's not my place. You can trade however you want. But seeing how like the cipher is an in-house pattern, how we invented it, I just want to let you know like that's not a cipher pattern. Like I don't mean, I don't like telling people what to do, but I don't want to just let a mistake go because I know people are trading live money. And long story short, we kind of got into these back and forth. We're like, well, what are the rules? How is this? Well, I got this Fibonacci here. I'm like, well, that's not a 127 or that's not a blah, 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 blah. And they said, how come? That's what the pattern tool tells me. So we ended up finding out that it was a pattern tool that it draws the fib extensions on differently. It doesn't do it kind of like XDay how we do. So people were getting false fibs, right? They were getting valid cipher patterns that had, you know, a 127 right here, right? This would be a 127. You can see on your chart, clearly not near a 127. So they'd have valid cipher patterns that were too short. They would have invalid ones that were too long. So if you're going to do ciphers, use the cipher tool. This corrects the problem, and hats off to Tradingview. Tradingview does a great job at kind of seeing what people need, right? You can see this one. This is accurate, right? We can put it right here. You can see 127. That's going to be a better way of doing it versus using the pattern tool. So glad you brought that up. I think it was Nikos, because we do have a cipher here, potential cipher here on euro dollar. But reminded me of the question I saw in the chat earlier today or late last night at some point when I was late afternoon, I think it was. It came on. Cool. Real quick, another question here on. Hey, George. Nice to see you, man. All right. So thank you guys for joining. I will see you guys tomorrow, same time, same place. Talking to the live streamers, of course. Live rumors, we're going to be in here for a while. Hit that like button on the way out. Leave any questions or comments below, and I'll go back and answer them. Let's now go to Zach.